Hello traders, Gary Wagner here just before 11:30 in Honolulu, 5:30 in New York. It is Tuesday, 23rd day of April 2019, and this is the daily report for gold and silver. Strength in U.S. equities resulting in a stronger U.S. dollar have definitely put pressure on the precious metals complex with the exception of palladium. The NASDAQ traded to a new contract high today, and that index S&P really challenged the old record, and the Dow Jones Industrial Average gained about 0.5%, although that is lagging behind the two other indexes. The dollar itself was extremely strong and accounts for the majority, if not all, of today's drawdown, at least in gold, but in the majority of the precious metals, we saw that occur. Let's take a look at current pricing. Gold is currently trading off by about 0.25%, 0.26%, which results in a $3.30 drawdown, with most active June's futures contract, closing at $12.7430. When we take a look at the dollar index, we can see that gained 0.31%. So in the case of gold, today's drawdown was certainly a direct result of dollar strength. However, the same cannot be said for silver. Silver was the one metal that sustained the greatest drawdown today, losing 1.25%, a total of 18.5 cents, and closing at $14.79. Platinum came in second place in terms of drawdowns, giving up a little over 1%, 1.01%, and closing at $893.10. And the exception today was palladium. Palladium gained $7.60, a little over 0.5%, and that closed at $1,377.40. The NASDAQ was really the big gainer today, closing at a new record high of 8119.77, and that is a 104-point gain on the day, 1.3%. And then coming in close behind that was the Standard & Poor's, which closed up 0.88%, a gain of almost 26 points, closing at 2933.68. Let's take a look at our technical studies. So traders, bullish market sentiment regarding the current economy in the United States led to a couple of factors which definitely put pressure on the precious metals markets today. The first was higher U.S. equity prices. We are looking at a daily candlestick chart of the NASDAQ composite, and we can see the close today of 8119.77, definitely taking out the former high. The former high occurred back in the end of August of last year, and that's this area that I've just circled, and we can certainly see that the composite took that closing price out by about 10 points. I believe the former high was 8109, and 8119 is our closing price today. That, of course, would reflect in the U.S. dollar index. Dollar index surging, although trading well off of the intraday high today, did close up about 0.33%, 0.31%, at 97.25. And the reason that is so important, that 0.31% gain, is when we look at current pricing in gold, and gold did sustain a pretty moderate drawdown, but nonetheless in a very, very critical area. Gold futures today lost about $3.30, and that is a 0.26% decline. So we've got a decline in gold that is less than a gain in the U.S. dollar index, which tells us that there was some slight buying that went into the market, and that curtailed any major drop in the market or sustained drop in the market in terms of a percentage drawdown. Now, we certainly saw that in silver, and we'll look at that in a second. But when we look at our daily chart of gold futures, this, of course, is June futures, what we can see is that this dramatic intraday low that came in roughly at 1267.90, and the market was able to close just above that. There's two key areas that we have been looking at. This area right here is the 0.5 retracement. And that, of course, is our shorter data set, which begins back in November of last year up to this year's high at 1350, so roughly 1176 to 1350. The longer of the two data sets is the 0.38% retracement. We did close below that, which is at 1276.40, and that, of course, as you know, is derived from a much longer data set that goes back quite a few years when gold was trading at about 1120. So with the low that we saw today, combined with the fact that it did in fact close under the 0.38%, and I believe that that was a pretty critical level. And one of the reasons I believe that that was critical is when we look at recent price action, for example, here in January, as well as recent price action that occurred earlier this month, we can see that that price point was a point that we saw the market able to hold above. And we also saw up until today the fact that really what we were beginning to see was the real potential for some sort of a rounded bottom. And that rounded bottom, of course, had the ability to have a definitive level of support, and I really believe that that was challenged today, not only with today's price low, which of course was dramatic at 1267, but today's close, which occurred under that 0.38% level. My sense is that these lows did not hold, and based upon that fact, we could see, in fact, lower pricing. And if we get a solid break below on a closing basis this current level at 1273, our target is going to be quite a ways below that, because my sense is that it will go for the 0.50% retracement of this longer data set. Remember, the 3.8 was at 76, but 1247 is the 0.5% retracement on our Fibonacci retracement data sets, and it's of the longest one, which to me merits the most weight. And the fact that we broke through the 3.8% today is really significant. It tells me that we were not able to see prices sustain above that price point, and with strong equities, with the belief that the U.S. economy is running on, let's say, 7 or 8 out of 8 cylinders, it tells me that we could be looking at some more weakness in the market. We'll have to see how this plays out. And traders, before I move on to take a look at silver pricing today, I do want to take a look at the Japanese average chart of gold. This, of course, is the daily chart once again. And yesterday we saw the first occurrence of an upper wick. And when we are in a defined downtrend, what we are looking for is trend strength. And trend strength can be determined by two major factors. The first factor is the size of the candle itself, and then the second factor is the absence of upper wicks. And we have had an absence for 6 days until yesterday's occurrence, in which we actually had a very, very small bodied average candle with wicks both above and below. It's not the below, but it was the above that showed me that we had that potential on a technical basis to see this market form some sort of a base. However, once again, we see an absence of that upper wick, and it is that low that is most challenging to me, because that low comes in below a critical retracement level. Therefore, my recommendation is to maintain our neutral stance. A break on a closing basis below the 0.50% retracement would indicate that we are going to head lower about 1250, and we can go short there. Right now, it does seem as though the bearish market sentiment continues in the precious metals complex. And traders, in terms of percentage drawdowns today, the largest declines were seen in silver, losing 1.25% in trading today. You can see that expressed in this daily candlestick chart of most active silver futures. And one thing that we can say with some certainty is ever since this break came in, which occurred on April 11th, roughly 2 Thursdays ago, we have seen definitive price action below the 200-day moving average in silver, which certainly has a definitive bearish tendency and tells us that silver could track lower. My call right now in terms of a level of support really doesn't come in till about 1462, with major support in the market, I think, at 1450. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.